Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. The earnings for Tilray Brands, ticker symbol TLRY, and it's a very, very bad day for Tilray indeed. I did my very best to warn people. It doesn't seem to matter what I say. People always believe what they believe. They don't want to look at the numbers. I had someone say that Tilray was going to $1,000 today, someone trending on YouTube, or at least trying to, and people going, yes, buy it, bro. Well, the facts are, I'm going to bring you the numbers right now, and then we're going to bring you Erwin Simon live on the show. We have a beat on expectations. However, the expectations was low. Remember, the expectation is only set by Wall Street, what they think that the company is going to do. It beat by 1 cent. However, the big story of the day is the huge miss in revenue. That's all we really care about. The beat or the miss is not important. That's purely an expectation. What does that really mean anyway? What's important is they've missed huge on revenue. Now, the only good part of the story is they have projected a great growth next year. The expectations or later on this year, the guidance is up. However, Erwin Simon keeps delivering that. I think today the board, people on the board today are going to be, as I said before, don't be surprised if he gets replaced. He's taken too much out of this stock for himself. Keeps promising great guidance. It's just not delivering. And people now are fed up with it. And you can see there the stock price is down 10.2%. My concern was it would go under $1 today. Well, it will go way below $1 if the jobs report in 15 minutes comes in bad. If that comes in bad today and rates are expected to stay up for longer, which is already priced in what we think is going to happen, however, it could get a lot worse. And if it does bring us a bad job report, and I'll be reporting on it live in a few minutes, then we've got way below $1. I try to tell people, unfortunately, people don't really want to care about the numbers. Let me bring you the numbers right now. Here we go. So this is it here. Let me bring you the latest numbers. We've got a short interest of 12.68. Short interest is bad, but no short squeeze. There's not enough here to drive it up. Only should drive it down. Short interest, 12.68. The headlines is Tilray Brands, Cannabis and Beverage Business show sequential growth in FQ2. Sequential growth and guidance. I'll bring you all these numbers in a moment. Okay, we'll have all these numbers. Plus, we've got earnings. Tilray reports mixed FQ2 results, reaffirms revenue outlook. The revenue outlook is good. The guidance is good. But this is what's important, this here. It beats by 0.01 expectation revenue of 21 million, but misses by 5.3 million. The revenue is down. So Tilray non-GAAP EPS beats by 0.01. Revenue of 211 million, up 8.8, but misses by 5.33. And why that's important is it's missed. It's up 8%, fantastic. However, it misses by what they expected to earn. So Erwin Simons keeps trying to sell this, and it does not. It's just not delivering. Hence why it's down today. But more importantly, why it's down today is what's going to happen in the next 15 minutes. People are bracing themselves for a bad report. This could be, if you believe that the jobs report is going to come in good today and the market is going to rally upward, this is a great opportunity for Tilray. So by now, some people have already switched off. They've heard me saying bad things and they've not got through to this part. This is the important part. If the job report is good today and the market rallies, this was a buying opportunity. You could get your money back very, very quickly, even perhaps make 10, 15% back before the drop. That could easily happen. However, you're now not investing in Tilray, you're betting on the market. That's a very, very different thing. So what's going to happen to the market? We don't know. We're like 12 minutes away now. We are going to cover it live, of course. So we'll see what happens. It's anyone's guess. We're already pricing in a negative situation, but it could be a lot worse. All right, we shall see. Only a few moments away and we'll find out. Let me just make some tweaks here to the system. I'm going to just... there we go. That's better. Just making a few alterations to the studio. For some reason, you can see my camera's changed. Let me just change that over there. Come on. Let's put that back there. Bloody hell. What happened there? There we go. That's it. Right. What's happening there? Got a few issues here. What's going on here? Why have I got that opened up? Anyway. It's all happening at once. I think I'm going to sneeze now as well, just to top it off. No? Am I? You know when you get that feeling? Yep. I sneezed. There it was. Okay. So we got Erwin Simon live on the show. The Tilray Brands earnings in 13 minutes from now. We're getting ready. Let's bring all the comments on the screen. Good morning, all. First snowy day in Georgia in years. Patrick Black, good morning to you. How are you this morning? Tilray times 30. Well, okay. Tilray going down. It has. Muggers arrived. Picking breakfast bar. Yay! I saw that this morning. I'm gonna have a look in a sec. Good morning. Mobic's done a jump out of hours from 139 to 149. Congratulations, Iberian Wolf, to you. It's all about the jobs report. Thank you, Patrick. Appreciate that very much. All right. The overall market. The overall market is down, but steadily moving up. It's all prepared. It's oversold itself, as it always does. So that way it can make money on the way up. Let me show you the numbers. This is what we're looking at. Non-farm payrolls and unemployment. Forecast previous 4.3. So as you can see, 4.3%. And the previous was 4.2. This is what's driven the market down. All right. We want to see that go the other way. All right. We'll see what happens in a few minutes' time. We've got like 12 minutes to go now. This is the fear index. It's been a lot worse. It's been in extreme fear in the last week. It's now up to fear. Right. You've got now Tilray Brands starting to come up. This could be an opportunity, as I'm saying. I wouldn't invest in this. I don't gamble. I don't speculate. I don't base my investments on something else happening. That's not really a good idea. But we shall find out in a few moments. The earnings call is live on our show. So now everybody's in. Let me welcome everybody. If you want to get the word out about Tilray this morning, please tap the like button and consider subscribing to our channel. But it's a very red day at the moment in the studio. Tilray Brands is now coming up. Was this a good buying opportunity? Well, it all comes down to whether you believe the guidance for Tilray is good or not, and you can accept that, but also you are okay with predicting the jobs report. I'm not. I can't. And anything other than that was hopiary, and we don't do hopiary on this show. Okay? So what I'm going to do now is we've only got a few seconds to go, so I'm just going to go on my social media and put out Tilray. Let me just grab this a moment. Let me just grab that. I'm going to repost my Tilray this morning. Tilray Brands earnings. I have the numbers. All right, I'm just creating our link to start the show. So I'll give you the link in a moment so you can vote on all these things. Will it be a green day for Tilray? You'll know in a couple of moments. It won't take long. It's all about the jobs report, not about Tilray anymore. Let me just make sure I got that right. Okay, that should do it. Right then, let me just copy and paste that in. We're watching Tilray. It could be an opportunity if the jobs report comes in good, but if it doesn't, then it's going below $1. We shall see what happens. Tilray Brands, okay. There's that. I posted it on my Blue Sky. I'm now going to post it on X. Tilray Brands. There it is. I will give you the poll in a moment. You can vote on this. stand by. We're watching it. We've got 10 minutes to go before the call starts. I'll bring it to you live. Just a few moments. I'm just posting on all of my social media, and then I'll give you the link so you can take part and vote and have your say and all the rest of it. And if you want to call in as well, if you disagree with me or you have a comment to make, you are welcome to call in, be live on the show, have your voice. A lot of people are interested in this stock. It's a bit of a scary one today, though. It's all down to the jobs report, how confident the markets are. And that's why I can't invest in this at the moment, because that would be, for me, a gamble. And I don't like to gamble with my money. Right. Okay, I think I've got everything done on all the socials. Now I'll give you the links to all of these, and you can go and have your say if you want to know what's going on and have your opinion out there. Let's see, and let me put our poll on the Lucas Archie indicator. That got to there, our community tab. And the question I'm asking you today is, will Tilray be green today? Let's have a look. Will it be, whoops, Daisy. Will it be green today? Okay. Will Tilray be green today? Image poll. Yes. I'll give you the link for this in a moment. Or no. Or undecided. You don't know. That's fair enough. There's a lot of people in that camp as well. So let me get the image on there. Here we go. We've got 8 minutes to go before the event starts. Yes. No. And undecided. There you go. Let's have a look. Right. Okay. We've got the Lucas Archie there. That's good. Now I'll give you all the links. So stand by. Starting to move up now. Be careful though. It's all now whether you think that Irwin Simon is going to convince you that that guidance figure is acceptable. All right. So how many are tuned in with me this morning? 94. Please tap the like button and consider subscribing to the channel. If we get to 100 likes, we can get this out to the world. We're at 28 likes now. Please tap the like button. Let's see if we can get it up to 100 before the call begins. That'd be really cool. So now I'm going to give you the links. So if you want to vote on Blue Sky, I've got, there it is. There's my Blue Sky in the chat. We're also on, and let me show you the link. There it is. If you want to leave your thoughts and comments, if you think it's a green day today for Tilray on Blue Sky. Also, we're on X. Let me give you the information for X. And there's Instagram as well. So if you want to have your say over there. And it's on Facebook as well. I don't give the links out for that because it's not really that much important, but I do post it there as well. I don't think Mark Zuckerberg does much for the show. Right, so if you just tuned in, we've now got 5 minutes to go. Starting to go up, starting to move up quickly. Was that a good time to buy? Well, if it does go up, it'll be sold straight off because with 5 minutes time, we've got the numbers from the jobs report. Someone here is saying Tilray is going to go up by 30 times. That makes no sense. That doesn't. So anyway, good morning from Fire, California. So sorry to hear this. And it seems to be people setting it on fire on purpose. People going around setting fires. I've no idea what the sense of that is. Who the hell would set fire on purpose? It's just crazy. If bad jobs report, do you think defensive stocks like Coca-Cola will go up? Absolutely. They're going up already. Or will it be an all-round decline? No. Defensive will go up. Absolutely right. Hopefully the report is good. Hi, Martin. YOLO, triple. Will UK bond market prices have an effect on the US market? Will the UK bond market? No. The UK will have an effect on the US market, but we don't tend to react from the UK market. Much bigger and stronger economy. Tilray, CJC merger. If you've got evidence of that, share it with me. Become a member. Don't just say stuff. Send it in via verified links. What time is it coming out? We've already got the report out. I've already told you that they've beaten on earnings, but the expectation wasn't that impressive. They've beaten on well, their guidance is up. Their guidance is good, but they missed on revenue. Big miss on revenue. It's again selling the future story. It's whether you can believe Irwin Simon or not. I'm afraid the board doesn't agree with him anymore. Be careful when the market gets greedy. Be greedy when the market gets fearful. Thought on 101 Nation and revenue on market cap. Thought on one-on-one ration on revenue and market cap. Can't. I'm not sure I understand the question. And why would the report move Tilray? Why would the report move Tilray? The report is everything today. It's moving the entire economy. The entire economy is on the jobs report today. Literally everything hangs on the Fed. Don't fight the Fed. It's as simple as that. You can deny it all you want, but you cannot fight the Fed. You cannot fight the economy. You cannot fight the bigger picture. The macro conditions right now, if rates stay up for longer because of a bad jobs report and bad CPI and inflation coming in a few days' time, then I'm afraid high-risk stocks, Russell stocks, low-cap stocks, stocks that borrow money are all going down. It's not even a debate. It's a fact. Steve Wally, good morning all. Hi from Korea. Good afternoon to you. Lovely to have you here. Morning, everyone. I'm at Kennedy today. SpaceX will be launching tomorrow. I love it. Mark Saxby. Great stuff. Hello all. Good morning to you. Ernestus. Tilray will go up 30x. Someone is definitely using Tilray for sure. People just say all sorts of stuff. Right now, it's moving. It's moving up now. If you did buy that, I would certainly consider taking some profit off the table. Hi, Martin. Hope you're good. I am well. Thank you very much indeed. Up in smoke. Yeah, literally. His comment literally was up in smoke, I think. Right, we've got 3 minutes to go. Let's look at the overall market. The overall market. Let me go to the day. It's just down, but it's all about the jobs report. We'll bring you the jobs report live from Wall Street in a couple of minutes. We're on a break at the moment, but we're all on standby. We're also bringing you the Tilray earnings as it happens. So stand by. It's all about to kick off. Jobs report is moments away. It will go into the earnings report. So we'll keep our eye on it. It'll come out exactly the same time. I would not be surprised at all if Tilray go late by a minute or so. They're always late anyway. Most earnings are. But I would have thought they'll go late because they want the jobs report out. If it's a good jobs report, people are going to buy the stock. And they've already started to buy it. That's why it's going up now. Right. We got 1 minute before the call. We need 100 likes. Are you ready? Let's go. Let's get the news out about Tilray this morning. Are you ready? Are you ready? Okay, 128 watching, 134 watching. 1 minute to go. It's all about the jobs report. Tilray is now starting to move. It's sold off. It beat on earnings by 1 cent. Its guidance is up, but Irwin Simon keeps saying that. But the ultimate number is it missed on revenue. It missed on revenue. 134. Right, how many likes have we got now? We'll start at 17. Here we go. 5, 4, 3, 2, 1. We got 1 minute. We got 45 seconds to go before the jobs report. You need the jobs report and you need the earnings. Here we go. 37 likes. Tap the like button. We need 100 likes in the next 30 seconds. Come on, we've got to get the word out about the jobs report. Everything is to do with the jobs report. If it's a good report, Tilray Brands will go up 10-15%. If it's not, it will go below $1. It's as simple as that. That's not an investment strategy. That's gambling. 42. We've got 30 seconds to go. 5, 4, 3, 2, 1. Let's see what we can get. Everyone tap the like button. We're up to 44 likes. 100 likes. YouTube will share this out. We've now got 35. What we got now? Hang on. Where are we? I can't see my clock anymore. So I'm going to come off there. Come out of there. That'll do for me. That'll do for me. Let me come back to Tilray. Let me go over to Wall Street. Let's see the jobs report.
There, but obviously, if the incomes remain on the high side, there's going to be an issue.
Down goes the market. Down goes the market now. Big sell-off.
Wages, and that all feeds through into higher prices.
Well,
or reverse.
Take it away,
Here
it is.
All right, here we go. Non-farm payrolls for the month of December on our jobs report. Way hot, 256,000. Wow. What a shocker. 212,000 on last week's revised.
Tilray Brands earnings seconds away.
But let's look at 2 weeks worth. If we get 2 weeks worth,
Tilray Brands hasn't started yet.
Revisions, we're looking at down 8,000, down 8,000. Now 256.
And there goes Tilray Brands, exactly as predicted. Now it's selling down.
March of last year when it was 310,000, which means it would be the second best, basically going back to that point. Now, let's look at some of the important internals, shall we? Average hourly earnings up
Tilray earnings hasn't started yet. It starts in 1 minute.
Up 0.4.
I told you they'd go late.
What we had been running, and if you look at the average hourly earnings year over year, we broke the 0.4. We're now down to 3.9, which in some ways may be good news. I'd like to see people make more wages, but we know that we've been feeding the beast with regard to income and higher prices. 3.9 equates
I'm listing it for Tilray earnings hasn't started yet.
You have to go all the way back to March.
They're going to be a few minutes late because of this.
Interesting, all in all. If we look at average hourly work week, 34.3 basically has been where it has been most of last year. If we look at the underemployment rate, or U6, 62.5, exactly as expected. I'm sorry. That was the labor force
Tilray earnings follows this.
62.5.
Stand by.
It has been hovering at that level, Joe. 62.5. 62.6 was October of last year. Last year's complete high water mark was 62.7. The lowest of last year was 62.5. Just to put a face on 62.5. And now the underemployment rate, known as U6, 7.5%. That is way down from 7.8, which became revised to 7.7. 7.5
for the second quarter ended November 30th, 2024. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session for analysts and investment firms conducted via audio. I will now turn the call over to Ms. Baron Narada, Tilray Brands Chief Communications and Corporate Affairs Officer.
Tilray Brands has done exactly what I said it would do on the basis of the jobs report.
And good morning, everyone.
I hope you took the
profit. By now, you should have access to the earnings press release, which is available on the investors section of the Tilray Brands website at tilray.com and has been filed with the SEC and the CSA. Please note that during today's call, we will be referring to various non-GAAP financial measures that can provide useful information for investors. However, the presentation of this information is not intended to be considered in isolation or as a substitute for the financial information presented in accordance with GAAP. The earnings press release contains a reconciliation of each non-GAAP financial measure.
I might buy more S&P right now. Stand by.
In accordance with GAAP. In addition, we will be making numerous forward-looking statements during our remarks and in response to your questions. These statements are based on our current expectations and beliefs and involve known and unknown risks and uncertainties which may prove to be incorrect. Actual results could differ materially from those described in those forward-looking statements. The text in our earnings press release includes many of the risks and uncertainties associated with such forward-looking statements. Today, we will be hearing from key members of our senior leadership team, beginning with Irwin Simon, Chairman and Chief Executive Officer, who will provide opening remarks and commentary, followed by Carl Martyn, Chief Financial Officer, who will review our second quarter financial results for fiscal year 2025. Also joining us for the question and answer segment are Denise Bolschek, Chief Strategy Officer and Head of International, Blair McNeil, President of Tilray Canada, and Ty Gilmore, President of Tilray Beverages North America. And now I'd like to turn the call over to Tilray Brands Chairman and CEO, Irwin Simon.
Thank you, Baron, and good morning, everyone, and thank you for joining us today. Tilray Brands has experienced significant growth over the past 5 years, revolutionizing consumer products. Tilray Brands today is a leading force at the forefront of the beverage industry, revitalizing the beer market, driving growth in spirits and non-alcoholic beverages, and advancing the legitimacy of cannabis for both recreational and medical use. Through our brew clubs, we focus on bringing people together, creating exceptional experiences through entertainment, and enhancing lives through the moments of connection. As I've said in the past, new industries are not born, they are built. Tilray operates in over 20 countries across 5 continents with a portfolio of over 40 consumer-connected lifestyle brands and 20 vertically integrated facilities that produce approximately 90% of our products in-house, ensuring the highest qualities of our offerings. Tilray maintains its position as the largest cannabis business in Canada by revenue, holds a leading medical cannabis business across Europe, and operates the largest branded hemp business in North America, and is among the top 5 craft beer businesses in the United States in the terms of scale. Tilray has diversified and expanded beyond being a solely Canadian cannabis company. We are advancing the consumer packaged good industry through the introduction of new and innovative products that shape how individuals eat, drink, and relax, and provide relief to medical conditions where other treatment options have failed. These offerings address current consumer needs, and we are prepared to meet their future demands. Our success in establishing a new era of consumer products tailored to evolving consumption habits demonstrates our commitment to delivering innovative solutions that meet modern consumer demands and drive growth across our industries. At Tilray Brands, we're committed to leverage advanced technology to advance our efficiency and drive growth. We are partnering with Microsoft and their AI platforms on a global scale to bolster our expertise, optimize our operations, achieve significant improvements, and propel our business forward. Tilray Brands is trailblazing the future of consumer products through the infrastructure we have built and the investment we've made and continue to make in our businesses, facilities, systems, and people around the world. In Q2, we achieved strong net revenue results while strengthening our operations and increasing our gross margin and gross profits across our business. Quarter 2 net revenue grew 9% year-over-year to $211 million. Gross profit increased by 29%, and gross margin increased by 500 basis points compared to the prior quarter. Our beverage business, Tilray Beverages, which includes craft beer, spirits, and non-alcoholic beverages, grew 36% in net revenue year-over-year. In cannabis, we continue to lead the Canadian cannabis market by revenue. We significantly grew our international business by 25% year-over-year as we launched new commercial products and expanded our reach across Europe. Our wellness business continues to lead the hemp industry, increasing branded market share to 56%, with Manitoba Harvest in the U.S. and nearly 80% share in Canada. Additionally, as Carl will discuss further, our financial profile remains strong. During the quarter, we reported an adjusted net loss of $2 million, primarily related to the investment necessary to develop the infrastructure and operating systems across our business sectors and drive industry leadership and innovation. Tilray operates with a robust balance sheet, ample cash reserves, reduced debt levels, and flexibility to explore additional potential acquisition. Our financial strength allows us to seize new opportunities and capitalize on market trends. Importantly, Tilray is not exposed to meaningful tariff risk in the U.S. Let's now dive deeper into each of our business segments. Starting with our beverage business, to support the expansion of our beverage business and brands, we merged our beer and spirit operations and teams, creating Tilray Beverages under the leadership of Ty Gilmore. Tilray expansion into the beverage category began in December 2020 with the acquisition of Sweetwater Brewing Company, followed by the acquisition of Green Flash, Alpine, Montauk Brewing Companies, and Breckenridge Distillery, our first spirit acquisition. We significantly increased our footprint through Craft Acquisition 1 from ABI in October 2023 and Craft Acquisition 2 in September 2024 from Molson Coors. To support the growth of these acquired brands and establish a clear path to profitability, we've implemented Project 420. This comprehensive plan focuses on enhancing margins and profitability through operational optimization, cost savings and synergies, and portfolio optimization. Through Project 420, we aim to achieve $25 million in cost savings, synergies, and cost.
Please tap the like button. This will share this information out to the world. 100 likes.
$million.
We get suggested.
Today,
please tap the like. Thank
Tilray Beverages generate a third of Tilray's global revenue and includes more than 20 beverage brands, which includes 15 American craft beer brands, 10 network manufacturing facilities, over 700 distributors, 20 brew pubs and restaurants, and a single integrated sales and marketing team operating across the U.S. Our Tilray Beverage strategy emphasizes strategic brand growth within selected states and regional markets, prioritizing product excellence and scalability. In Q2, our beverage business achieved $63 million in net revenue and increased adjusted gross margins by 400 basis points to reach a 42%. Tilray Beverages has established itself as a leading provider of craft beer, spirits, and non-alcoholic beverages in key U.S. regions, including the Northeast, Pacific Northwest, Colorado, Texas, Michigan, and the Southeast. From a regional brand perspective nationwide, Tilray Beverage is the #1 craft supplier in Metro New York, with Montauk Brewing and Blue Point Brewing brands, the #1 craft supplier in the Pacific Northwest, Oregon and Washington, with 10 Barrel Brewing, Red Hook and Widmer Brothers Brewing brands, the #2 craft supplier in the Southeast, Florida and Georgia, with Sweetwater Brewing and Shock Top brands, and the #4 craft supplier in Colorado, according to our data. Notably, we achieved a 10% increase in Shock Top distribution during Q2 in the Southeast, securing 1,400 new placements for the brand. Within the spirits category, Breckenridge Distillery is a notable brand in the bourbon sector, as it experienced higher depletions compared to others in a declining market. It also made a significant progress in the vodka and gin markets, complemented by its world-class restaurant and retail operations that enhance the overall hospitality experience. Our primary objective for growing our spirits business is to expand our market share across the U.S. In our non-alcoholic brand and product portfolio, the recently launched brand Runner's High Brewing Company will soon be available in over 1,200 public stores, with plans for expansion into additional markets. The non-alcoholic craft beer segment represents a significant opportunity for growth, with total addressable market estimated to be at $37 billion worldwide. Given our scale and geographic footprint, we will continue to explore ways to capture a share of this rapidly expanding market. Within the non-alc segment, we've also introduced hemp-derived Delta-9 THC brands and products online through our direct-to-consumer channels and in key states across the U.S., including Florida, Alabama, Georgia, North Carolina, South Carolina, Tennessee, Louisiana, New Jersey, and Texas. We are leveraging our established craft beer distribution network, which is enthusiastic about this growth opportunity in independent retailers, convenience stores, and package stores, including multi-state retailers, Total Wine, and more. Tilray Beverage's strategic growth initiatives are poised to revolutionize our beverage portfolio, attracting a more diverse and expansive consumer base. We are planning to expand our beverage operations internationally, including ventures into Canada and Europe, with a vision to become a global beverage leader. By leveraging our innovating products and exceptional quality, we aim to set new standards in the industry and achieve remarkable success. Turning to cannabis, in fiscal Q2, our global cannabis business generated $66 million in net revenue and increased gross margin by 400 basis points. In Canada, Tilray remains the leader in Canadian cannabis market by revenue. In the second quarter, Tilray regained the number one position in the flower category, which constitute around 35% of cannabis retail sales. With brands like Broken Coast, Redecan, Good Supply, and Bake Sale increasing market share through strong innovation, good genetics, and great value. In the THC beverage category, Tilray had a leading market share of 45%, with XMG, Malo THC beverages ranking the number one and number two respectively. We also retained the number one market share in oils and capsules categories combined. 15% of Tilray's Canadian cannabis net sales revenue was from new innovation and a lot more to come. We shipped approximately 63 metric tons of cannabis biomass in Canada in Q2, representing about 22% of the implied Canadian market volume. We continue to leverage the wholesale channel, where contribution margins grow as supply tightens. In adult recreational cannabis, we shipped approximately 15 million pre-roll cones and over 1.7 million cans of beverages. Over the past 3 years, we focused on improving operational efficiency. During this period, we reduced costs by over $100 million through eliminating duplication, consolidating, packaging, logistics, enhancing process with technology to lower labor costs. This effort includes emphasizing revenue quality over quantity, which will improve margins and position our business for future success. For instance, over the past year, we reduced our exposure to lower margin categories such as vape and infused pre-rolls and prioritized other categories even at the expense of some market share. With a facility footprint of approximately 5 million square feet, along the optimization of our value chain and business process, Tilray is best positioned for long-term success in the Canadian cannabis market. As demand for our cannabis products increase, we possess the flexibility, capability, cost structure, and optimal growth space necessary to nearly double our output. In the U.S., Tilray is strategically well-positioned to capitalize on the anticipated $8 billion to $10 billion medical cannabis market upon federal legalization. Our advantage is our best-in-class ability to cultivate large-scale medical and pharmaceutical-grade cannabis, which requires rigorous quality control standards and processes. Additionally, our established medical brands and product innovation can be utilized in Tilray's primary legal market, such as Canada, Germany, Portugal, and various other European countries. Should the United States legalize medical cannabis, this could represent an additional $250 million opportunity for Tilray, potentially capturing 2 to 3% of the U.S. medical cannabis market. Turning to our international business, where we executed against our strategic initiative and drove significant organic growth and margin in the second quarter. In Q2, international cannabis business grew 25% over the prior year period, driven by sales growth in Germany, Poland, the UK, and
Good luck, pal. The PAL Group are also sharing the Tilray Brands today. The more people that talk about it, the better. We're here to support every channel, every investor. This is what this channel is all about. Congratulations to PAL Group today.
The increased growth in the German market, especially in whole flower category, is due to the cannabis descheduling under the new regulations. In addition, we continue to see increased differentiation between the physician-led and the patient-led channels, with the patient-led channels requiring a greater emphasis on product assortment, especially in genetics, brand portfolio, segmentation, and quality. As leaders in the physician-led channel, where we have a dominant share of the medical cannabis extract category, we are now focusing on expanding within the patient-led channel. We are confident in our ability to win a sizable share of this channel, given our well-placed investment with 2 EU GMP-certified facilities in Germany and Portugal, and our route to market through Tilray Pharma. Our German cultivation facility, TLRY RX, was the first to be granted permission to expand our cultivation under Germany's new Medical Cannabis Act And in the quarter, we sold our first commercial batches of medical cannabis cultivated and processed in Germany under this newly expanded license. Supplementing these assets are our Canadian cultivation facilities and our deep expertise of our team, which has allowed us to establish a flexible and diverse supply chain to meet the needs of patients we serve in various countries in which we participate by introducing new medical cannabis brands and products to these markets. We believe Germany's new cannabis regulations will drive positive change in drug policy across Europe. Tilray aims to expand its global brand to Europe's 700+ million people, leveraging our infrastructure, product portfolio, and commitment to medical cannabis, and our experienced team to enter new markets with significant revenue potential. In Poland, demand remains strong as our revenue increased both over the prior year and quarter over quarter. In Italy, we are focused on increasing awareness of the Tilray medical brand and our product portfolio, where we have market authorization for 3 medical cannabis extracts, as well as investing in the education of physicians regarding medical cannabis. In the UK, our revenue has increased compared to the previous year, and our Q1 results. We're implementing several strategic initiatives to enhance our presence in the UK market, which will serve as our European headquarters for international sales and commercial operations going forward. Turning to Australia, which is still in early stages, it is quickly emerging as a significant medical cannabis market. Similar to Germany, we see increased differentiation between the physician-led and the patient-led channels. In response, we launched Broken Coast, Redican, Good Supply brands and products, which provides the patient with a segmented portfolio of products while we continue to deliver on the trust, safety, and consistency that has become expected from our Tilray medical brand. And finally, in Q2, Tilray Wellness delivered a 13% net revenue growth compared to the prior year, driven by strong core business sales, coupled with hemp innovation and the expansion into wellness beverages. A strong focus on cost helped the business unit improve margins, delivering a 200 basis point increase in gross margin. Tilray is also exploring further expansion opportunities in the wellness segment, especially focusing on protein-rich wellness products and foods to meet the growing consumer demand for healthy and nutrition options. With that, I will now turn the call over to Carl to discuss our financials in greater detail.
Please tap
Carl.
the like button. We want to get 100 likes to share this out on YouTube. We want to get the news out about Tilray. Thank you.
GAAP and in US dollars. Let's now review our quarterly performance for the 3 months ended November 30th, 2024. In Q2, net revenue was $211 million, 9% growth compared to the prior year quarter, net revenue of $194 million. As Irwin stated, it was our highest Q2 net revenue ever. On a constant currency basis, net revenue grew 10% to $213 million. By segment, beverage net revenue increased 36% to $63.1 million. Cannabis net revenue was in line with expectations at $65.7 million as a result of our strong focus on margins and strategic growth in key markets, which I will discuss in a moment. Distribution net revenue was flat, and wellness net revenue rose 13% to $14.6 million in the quarter. From a segment perspective, 30% of our net revenue was generated by our beverage business. 31% was generated by our cannabis business, 32% by our distribution business, and 7% by our wellness business. This compares to 23% in beverage, 35% in cannabis, 35% in distribution, and 7% in wellness in the prior year quarter. The year-over-year variance.
I've just bought 5 more shares of the S&P 500. Now over $250,000 invested.
Which we did not purchase until October 1st.
Good day for investors.
Gross profit increased by 29%, $61.2 million, compared to $47.4 million in the prior year quarter. Gross margin increased to 29%, and over 500 basis point increase from the prior year period, demonstrating our strong focus on controlling costs, driving revenues from our most profitable SKUs, and the ongoing optimization of our production footprint. Adjusted gross profit increased 20% to $62.6 million from $52.1 million in the prior year, while adjusted gross margin increased by 300 basis points to 30%, primarily reflecting our focus on integration efforts to improve our utilizations at our beverage facilities and favorable sales mix. Net loss was $85.3 million compared to a net loss of $46.2 million in the prior year quarter, with almost $75 million of non-cash costs. Part of those non-cash costs included a $34 million foreign exchange loss that was largely created as a function of the strengthening U.S. dollar after the U.S. presidential election. On a per-share basis, this amounted to a net loss of 10 cents per share compared to 7 cents per share in the prior year quarter. Adjusted net loss was $2.2 million compared to an adjusted net loss of $2.7 million in the prior year quarter, a 17% improvement year over year, with adjusted net loss per share coming in at 0, a significant beat to expectations of a 3-cent loss. Adjusted EBITDA was $9 million compared to $10.1 million in the prior year quarter. We are now approaching 6 consecutive years of generating positive adjusted EBITDA. The decrease in adjusted EBITDA from the prior year is primarily related to the SKU rationalization in our beverage business that Irwin spoke of earlier. Cash flow used in operations was $40.7 million compared to $30.4 million in the prior year quarter. Adjusted free cash flow was negative $43.6 million compared to $18.4 million in the prior year quarter, largely as a result of an increased demand in our working capital. Working capital increases were associated with annual payments in the quarter, increases in inventory at Tilray Pharma as it prepared to stock pharmacist inventories for the holidays, increases in inventory in beverages as we prepared for the positive impacts of the SKU rationalization plan, all offset by a significant decrease in Canadian cannabis inventory levels as it took advantage of positive pricing in the wholesale market. Turning now to our 4 business segments. Within our beverage segment, our $25 million synergy plan is well on its way with $17 million already realized. Part of our cost-saving initiatives were driven from implementing a product rationalization program to concentrate our product portfolio in key markets, prioritizing high-performing products and optimizing our cost structure. Year to date, the SKU rationalization plan lowered our revenues by $8 million, with an expectation that over the next 18 months, these impacts will be offset by the introduction of new product innovations and brand extensions, improving both sales and margins. The completion of this rationalization program will be accretive to earnings and will have positive impacts on our cash conversion cycle once complete. Beverage net revenue was $63.1 million, up 36% from $46.5 million in the prior year quarter, as previously discussed. As Irwin discussed, we now own and operate 20 brew pubs / restaurants in the U.S. that are in close proximity to the production of our craft brands. In the quarter, these operations contributed $10 million of the $63.1 million in revenue, and we expect them to be a key part of our strategy going forward, allowing us to increase brand visibility and gain an intimate understanding of our key consumers. Beverage gross profit increased to $25.2 million compared to $16 million, and adjusted gross profit was $26.5 million compared to $17.8 million, while our beverage gross margin was 40% compared to 34%, and adjusted gross margin was 42% from 38% in the prior year quarter. The 400 basis point improvement to adjusted gross margin was a result of our efforts in integrating and optimizing our facilities, as well as a favorable product mix. Gross cannabis revenue of $87.2 million was comprised of $59.1 million in Canadian adult use revenue, $14.9 million in international cannabis revenue, $6.7 million in Canadian medical cannabis revenue, and $6.5 million in wholesale cannabis revenue. Net cannabis revenue, which was reduced by the $21.5 million in excise taxes, was $65.7 million, essentially flat from the year-ago period. Revenue from Canadian medical cannabis grew 6%, despite the category being impacted by competition from the adult use market, while revenue from Canadian adult use decreased 18%, which was a result of our increased focus on preserving gross margin and maintaining a higher average selling price in categories with high excise tax. As a result of recent significant CapEx investments, we positioned ourselves for an improved margin opportunity.
6 more likes and we get suggested on YouTube. Please tap the like button. Let's get the word out about Tilray.
Our CapEx investments and size advantage put us in a position to succeed as margins in high excise tax categories come under pressure. International cannabis revenue rose 25%, which was largely driven by the expanding German medical market, as well as favorable variability in the timing of receiving export permits to countries other than Germany, resulting in fluctuations on a quarterly basis. Cannabis gross profit was $23.2 million, and cannabis gross margin was 35%. Adjusted cannabis gross profit was relatively flat at $23.2 million, compared to $23.6 million in the prior year quarter. Distribution net revenue, derived predominantly through CC Pharma, was $67.6 million, compared to $67.2 million in the prior year quarter. On a constant currency basis, distribution net revenue increased 3% to $69.4 million, compared to $67.2 million in the prior
Great, guys,
year
we did
quarter,
it. Now being suggested on YouTube.
Favorable product mix. Distribution gross profit increased to $8.4 million, compared to $7.1 million in the prior year period, while distribution gross margin increased to 12% from 11% in the prior year quarter, as a result of our extensive efforts in H2 last year to focus on higher margin SKUs. Wellness net revenue grew 13% to $14.6 million.
Pal, if you'd like to call in and end the show,
prior year quarter.
Call into the show, tell us about your thoughts.
Strategic focus on
It'd be great to have you on the show.
Including our launch of hemp-derived Delta-9 products and our organic growth within our branded hemp business related to higher consumption. Wellness gross profit was $4.5 million, up from $3.7 million in the prior year quarter, and gross margin rose to 31% compared to 29%, a result of decreased input costs and continued operational efficiencies. Our cash and marketable securities balance as of November 30th was $252.1 million, down slightly from $260.5 million at year-end. This change was a result of our purchase of the new craft brands, a temporary increase in working capital demands, all offset by the funds raised from our ATM. During the quarter, we raised gross proceeds of $46 million from our ATM, and subsequent to quarter end, we raised an additional $11 million. Finally, we are reaffirming our guidance for fiscal 2025. We anticipate net revenues to be between $950 and $1 billion. Let me now conclude our prepared remarks and open the lines for questions from our covering analysts. Operator, what's the first question?
Thank you. Before we get to the first question, as a reminder,
Triple
if you'd like
Chevy's
to ask a
revenue,
question,
211
please press
million,
star 1 on your
misses
telephone
by
keypad.
5.3
A
million.
tone will indicate your line
That's
is in the
not good
question
news.
queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys.
I think
Our
the
first question comes
rest
from the
speaks for
line
itself.
of Kaumil Gajrawala with Jefferies. Please proceed with your question.
Hey guys, good morning. I guess starting with the SKU rationalization, you've been talking about it for a while. We have more details today. Does it look like the rationalizations will be complete by the end of your fiscal year? Or is this something that's ongoing a little, for some amount longer?
So, good morning and thank you. I'm not sure it's going to be completed by the end of the fiscal year. We're well into it. You got to remember what we're doing here. We've taken Sweetwater, we've taken, the Montauk, we've taken the ABI acquisition, the Molson acquisition, as we bring them together. And we're eliminating over 300 plus SKUs, and we're ultimately eliminating states where we sold some of our brands before. So the majority will happen by the end of this fiscal year, but there absolutely will be some that will go into, 2026. And the big thing here is, listen, we've taken out, as we look for takeout costs of $25 million, we've taken out 15, 16 already. The big thing is as we introduce new SKUs to replace some of these other SKUs, and as we focus on certain, states that we're only going to sell our product. And it's not only us asking for this, it's retailers, it's distributors. So this is great. And you think about it, as we brought, how many companies together under Tilray Beverages and cleaning up the tail and cleaning up some of these lower margin products. And, it shows in our cost cutting, it shows in our margin, and it shows in our growth from some of these brands that this is absolutely working. And we haven't even launched our new products yet, so just stay tuned for that.
We will. You mentioned gross margins. That was going to be my next question. It's up nicely across a series of divisions. We have a lot of details on some of the blocking and tackling. Is there something bigger going on, maybe with the input costs or perhaps price compression or anything that we should know? Because it looks like kind of across the enterprise, the trajectory is the same, or is it as simple as the programs that you've talked about kind of starting to come to fruition?
Well, it's not coming from pricing, so that's the first thing. It's coming from just taking costs out of our system. Listen, when we put Tilray and Aphria together and then Hexa, we took out over $100 million. We can come back and in regards to share of cannabis in Canada, we're focusing on margin here. We've had major price compression. So the big thing is we're really focused on gross profit. We're really focused here on profitability. And, our adjusted net loss in the quarter is $2 million, okay? The majority of it is non-cash. So there's a big, big drive here to generate cash and really focus on margins here and to invest back in our business. And you're seeing this on gross margin growth here.
Got it. Thank you, guys.
Thank you.
Saab, that's all good, mate. I just wanted to re-emphasize
that
we
ask that you each keep to
everything
one
you see on
question.
screen is what I have.
Our next question comes from
I know you were only
Robert
joking,
Moscow
but it's
with
important
TD
just
Cowen. Please
to
proceed
say
with your
that so
question.
everyone realizes that.
Hi, thanks. I thought I remembered last quarter that, beverage sales were a bit below your internal expectations, and it was due to timing around innovation and shipments to distributors. And I want to know, I didn't hear much about it on the call today. Did that factor resolve itself in this quarter? And then also, maybe you can give a little bit more color on what this innovation pipeline looks like. Do you have a lot of work still to do to flesh that out? Thanks.
So, Robert, you're 100% right. In our first quarter, we had some challenges as we brought, the ABI businesses into our portfolio. We had some major out of stocks, bringing the ABI distributors on and taking them off the ABI system, putting them on ours in regards to supply costs and issues. There were some accounts that just stopped ordering because they were confused, and just the integration. So 100% in our first quarter, we had some negative comps that come out. Since then, listen, we've seen some great stuff happen in Shock Top. We've seen, our Montauk growth 9%, since we bought it. We've seen some great growth on Blue Point and Breckenridge. So we're seeing those volumes come back, and, Ty's on the call and he can jump in there. So that's why you're seeing up 36%. Now, some of that is absolutely acquisition growth, but what we're doing is we're taking these growth brands and getting rid of the products which slow moving and running them out. In regards to innovation, and Ty jump in here and some of the new innovation, but I'm not going to tip my hat yet, but we've got, in regards to these products, we've been out there presenting to the retailers, presenting to the distributors, and there's a big focus on a lot of our new beers. There's a big focus on our non-alc. There's a big focus on our energy drinks. There's a big focus, on our waters, and our Delta 9 drinks are a big thing that has been happening with us. Ty, you want to add anything to that?
There's the membership link.
No, I think you nailed it.
If you're on an iOS
with
device,
regards
set
to
to browser.
innovation, absolutely, we
request
are
desktop
locked
version.
and loaded.
Thank you.
in, now through the next 7 or 8 months. Everything is ready to go. It's been presented to retailers and distributors, and there is a lot of excitement about the spaces and categories that we're going to play in, which is exciting.
And Robert, I think the big thing is that's what everybody's looking for is new innovation out there. I think, the important thing is this here is taking out some of those slow-moving SKUs or taking the SKUs out of states that sold 10,000 cases a year and just plugged up the system. So that's number one. Number two is, distributors are looking for innovation. Some of our pub beers, some of our lighter beers, some of our non-alc, some of our infused drinks with hemp. So there's a good lineup here. And the big thing, which I've said, what we're trying to do on beer is make it fun again. And I think that's what we're doing. We have no imports, so there's no tariffs coming on our beers. Our beers are all made in our facilities. We've done a great job, I think, of moving our production around. We've closed one facility, in Texas. So, there's a plan here. And just think about it. We produce close to 15 million cases, beer a year, over 1 million barrels. And as we brought all these beer brands together, over 18 beer brands, we've brought all these cases together. We've brought all these facilities together in a matter of 4 years. Now it's taking costs out, getting the efficiencies, working with these distributors. Ty and team have put a blitz team on the street to really get out there and hit, our off-premise and really sell our products there. So, I'm excited to see what's happening in the beverage category. And now that we've integrated our spirits business, and listen, these aren't easy categories. So with that innovation and putting the people behind it and getting your distributors and retailers is something that's real important. And last but not least, got to get our consumers buying our products. And that's a big thing what we're trying to do. And there's a lot of, social media, and there's a lot of advertising. In the quarter, we spent about $600,000-$700,000 more in advertising the quarter back on these brands.
Thank you.
Thank you.
Thank you. Our next question comes from the line of Aaron Gray with Alliance Global Partners. Please proceed with your question.
Hi, good morning, and thank you for the question here. So I just want to dive a little bit more on Delta 9 beverages, specifically around potential changes in regulation. The Farm Bill has been delayed 2 years now. We're now going to have Republicans, controlling both chambers of Congress as well as a Republican president. So what's your anticipation in terms of the impact that could have on a Farm Bill getting done this year, impacts on THC hemp beverages? A lot of folks have been talking about potential, close out of loopholes, but keeping a carve out for THC.
I'll give you all your
beverages.
perks
So I'd
at
love
the
your
end. Stand
outlook
by,
on that,
Sightless.
just given right now you're one of the few players with an existing distribution system in the alcohol channel that's selling THC hemp, and how that could change with regulations evolving. Thank you.
Thank you. Listen, we do not, and it's good news, as
Here was the
Farm Bill's
Discord
kicked
link
down,
you want to use.
They kicked the can down the road for another 2 years, so that's number one. Number two, a lot of distributors and a lot of the states and retailers are really excited in this product. And, there was a couple $1 million of sales in this quarter that we've achieved already. And so, with that, we don't see any changes. We, think there's a big opportunity for us going forward. And, with Happy Flower, which is with our wellness team, which is out there, pushing that brand. And then, we have, our beverage team out there presenting and through our beer distributors, distributing that product. So there's lots of opportunities for us. And we have the products, we have the distribution, and we have the infrastructure and salespeople that are out there pushing it. And the retailers and distributors want it. That's, the big thing. So there should be, no change for us.
Okay, all right, great. Thank you very much.
Thank you.
Thank you. Our next question comes from the line of Frederico Gomez with ATB Capital Markets. Please proceed with your question.
Hi, good morning. Thanks for taking my question. I'm curious if you could talk about cannabis beverages in Canada. It seems like it's a very small part of the market still. So How do you see that segment? Why hasn't it become a more relevant part of the Canadian market? Whereas in the U.S. we see this Delta 9 market growing quite rapidly right now. Thanks.
Great question, and I have Blair on the call. We have a 45% share of the market, and it's about a $25-30 million business for us. We have a facility in London, Ontario, that produces that product. And I always say this here, I only sell it today in stores that sell cannabis. And, there's different pricing out there, and it's not cheap product. If we could sell that today in beer stores, if we could sell it on tap, how big a business that would be. But I think, one of the biggest problems today is just ultimately it's only sold in cannabis
13
stores
minutes before the market opens.
Pricing out there. But the opportunity as we sit today in dry January, that's when you'll see some of the biggest consumption of products. So we're ready, willing, and able. And I've said this before, if you could sell THC-infused drinks in the U.S., it's $1 billion plus, category out there, if we could ever do that, just by looking at the size and the opportunities in the 15 states that, hemp-derived drinks are today. The consumer is looking for it. Matter of fact, I was at a function last night, and the majority of people were drinking, hemp-infused drinks versus, alcohol drinks.
Thank you.
Thank you. Our next question comes from the line of Bill Kirk with Roth MKM. Please proceed with your question.
Hey, good morning, everyone. So I have a question on the revenue guidance. To get to in the range, the final quarters of the year need to be about $60 million or so larger than the revenue just posted in 2Q. So where does that acceleration come from?
Thanks, Bill. I think if people go back and look at our results from last year and follow the same pattern that we had, right? When you look at the base pattern, we talked about this a couple of times, you and I individually, where we're doing about half of our sales. Not half of our sales, but half of our EBITDA in Q4. We're doing Q1, 2, and 3. Our EBITDA tends to be around the other half, right? And then that's earned relatively evenly between the quarters, right? And so if you use that as the starting point, and then you work your way backwards through sales. When you look at the changes we've made this year, last year we purchased the new brands, the new craft brands, too late in the year to be involved in the spring reset. And so this year, Ty and his team and Prince have been able to get out to the distributors, to get out to our big accounts, and to really be a part of that spring reset with that new innovation. And we see significant increases in the sales in Q4 for beer as part of that spring reset. We also traditionally see sales upticks in our CC Pharma business in Q4. That's predominantly as pharmacists in Germany start stocking their inventories for the summer months as people go on vacation in Germany. And then we similarly see an uptick in things like pre-rolls and flowers, things that we're higher indexed on in terms of share in the Canadian cannabis market as people get ready for the summer.
Bill, a big part of that, is their seasonality in supply and new products. So stepping back, as Carl said, as you come out of dry January, the next 5 months for us, Memorial
10
Day,
minutes
July
before the bell
4th,
goes,
are some of the biggest beer consumption events out there. We also have our big 420 events around beer. Plus, you heard what I said before. We have over 100 new products that get into the marketplace, and that's when a lot of the resets happen with retailers. In regards to cannabis, Blair, how many new products do you have coming in the back half? We're from the Joe Place?
30 new innovations in the back half of the year.
So the new innovation that will come, from our cannabis business. And then one of the big problems that happened to us in Europe was in regards to just having supply from our European, and a lot of that's coming from Canada, and also getting the permits that we could ship in this country. had slowed things down. So with that, it's going to come from new products, it's going to come from organic growth, it's going to come from new distribution in the back half of the year.
Thank you. And then, Irwin, you quantified a $250 million opportunity for Tilray if the U.S. legalizes medical. I guess what gives you confidence the incoming administration will be favorable to rescheduling? And even if they were, that they would also be amenable to imports from Canada when there is so much tariff talk?
So, good question, number one. And again, I want to be very, clear. This is just, looking at a crystal ball and looking at, what it could be. And number one, I step back and I say this here, it's an $8 to $10 billion medical market today in the U.S. And with that, I think we could get somewhere between a 2 to 3 share. So a 2 to 3 share, there's a $160 to a $250 million business. We have a good-sized medical business today in Canada. We have a good-sized medical business in the U.S. We have the products, for pain, for anxiety, for sleep, for cancer patients, for multiple, medical reasons. We have the packaging, we have the products, we have the terpenes, we have, in regards to genetics, etc. So we would know how to market and package these products. With that, why do I think that it would be allowed? There's not a grow facility out there that could ever supply that. It would take us about 60 metric tons, and we have available to us today about 137 metric tons that could supply, that additional cannabis that we could grow. So I don't know, but just that's out there, me hoping and guessing. Listen, if there was a duty on it, etc., you'd have to pay it. I'm not sure why not. You couldn't. We ship EU GMP products all throughout Europe coming out of Canada, and some of the best cannabis grown today comes out of Canada. You got to remember, we have 5 million square feet. So that is, again, just all speculation, if that could happen out there. And I think the big thing, medical cannabis, if anything's going to legalize, it's medical cannabis. I think medical cannabis ultimately would be sold through drugstores, through the medical market, and would be prescribed by prescription. And I do come back and I say this here. The Trump administration is into tariffs, into duty, into, regulating stuff. And I think if you come back and I say it, the Canadian market for us, and we, sell a lot of cannabis in Canada, but we pay a lot of excise tax. And, there's billions of dollars paid each year in the Canadian market. You take that as a 10 times, and you think about the opportunity in the U.S. for the governments here to bring in that excise tax and eliminate illicit market. It's about business. And I think, that's how the Trump administration ultimately will look at it.
Thank
and
you.
Again, that's just my first.
Thank you.
Thank you. Our next question comes from the line of Matt Bottomley with Canaccord Genuity. Please proceed with your question.
Good morning, everyone. Maybe staying on the topic of regulation, but and changes, but maybe moving over to the international side of things. So, you got solid, 50 to 60 million of annual contribution in your international line, the way that it's allocated. And I'm just wondering, I guess, two questions there. So the first is just the visibility on that line with respect to what's been recurring for some time now and growing in some of these select markets that you're in versus maybe things that are more opportunistic and are harder to predict. So I'm just trying to get an idea of the, the underpinning of that current contribution you have in markets where you have exposure. And then the second side of that question would be, as I alluded to, the regulatory side of things. Anything, to note outside of your prepared comments? I know Germany is the market that a lot of us always like to talk about in the last little while, and just wondering if there's anything else to add to that.
Yep, thank you, Owen. So, hi, Matt. The question in terms of what is sort of the base of the business and what's reoccurring, what's opportunistic, what I would say is that we're very focused on building a sustainable, very solid foundation of profitable growth. We look at our business in terms of building out foundations, and I think I'm just going to take Germany, for example. We have a very strong base of medical extract business, which
Sightless,
is
give me your
reimbursed by
Discord
insurance and
username in the
very
chat.
profitable.
I can upgrade
We
you
look
and
at that
accept
business
friend
as sort of
request.
our foundation, and as the flower business has been
Thank you.
proliferating through the new regulations, we are focused on also growing that as well, and you can see that in our numbers, and that we've seen a 55% growth since the legalization. So we're very focused on both sides, and again, we don't believe that every dollar of revenue is created equal. And so to that end, we look at how do we create sustainable sales that are going to repeat themselves each and every quarter. And so very focused on that in Germany and Poland. We're building out our Italian market, which is very, very small at the moment. But as we build out the reputation of Tilray as a medical supplier of cannabis, it's very sustainable, consistent. We do see, in fact, that we're building a base of doctors that are, in fact, trusting in the Tilray product.
And I think the big thing here, which we come back, is number one, we have supply. Number two is each of these countries today are looking at how we do into medical cannabis. France is going to go in there ultimately with, certain products, okay? The UK is a big opportunity for us. So I think as you step back, listen, there's a big focus on the countries that, medical cannabis is legal today. We have a facility in Germany. We have a facility, in Portugal that can supply, and we have supply available to us out of Canada. But, I think, again, like the U.S., there's additional countries that are going to continuously open up. And with our infrastructure, and we have a large infrastructure in Europe today, you heard me talk about, putting an office in the UK that will be our international office. We look to grow our international business. At the same time, we're looking at the same strategy in the U.S. Do we enter, the beverage and spirits business and take some of our beverage and spirits business along with something else that, do we acquire in the international markets?
Okay, great. Thanks for all that.
Thank you.
Thank you. Our next question comes from the line of Pablo Zuanic with Zuanic & Associates. Please proceed with your question.
Thank you. First of all, congratulations on the growth in the international business. Look, I have a quick question for Ty, and then I want to follow up with you, Irwin, regarding the U.S. Ty, when I look at the hemp Delta-9 drinks market, it's mostly DTC,
2 minutes to go.
Right? And in theory, you have an advantage with your
Sightless, give me your
network,
Discord
to sell
username
your
in the
products.
chat, please.
But this is not a fast churning item yet. So it seems to me it's more conducive to DTC. People are selling
Tilray,
to
it's going
portals
down now.
and sending and shipping across states from online orders. Any quick thoughts on that?
Yeah, thanks for the question. Actually, we see the broader opportunity in brick and mortar. When we talk to retailers and distributors, we see both convenience, liquor stores. There's a big national chain that's leaning into HD9 in a really, really strong way. We absolutely are exploring and are taking part of D2C, but we see the much bigger opportunity in brick and mortar. And when you look at the consumer and what's happening in this segment, and you can look at some big chains, in Louisiana or what's happened over the last couple of years in Minnesota, you can clearly see that there's a consumer demand in brick and mortar stores to go to be able to look at brands.
Thank you, Sightless.
Players like us that clearly are going to be the adults in the room that have all the regulations ticked and tied. But I actually see the bigger opportunity in brick and mortar, not D2C.
And Pablo,
understood. That's great.
We have support, Pablo. We have support in many states already.
Sightless, you're all done. Congratulations.
We're working with partners to educate Congress on, what HDD9 is and how it should be best regulated. And, we would like it to be
I bought the SMP this morning.
Alcohol and sold through alcohol distributors. Today, there's Total Wine. You can go in and buy the product. ABC Fine Wine and 40, you can buy the product.
I bought the S&P,
brick and
predicted
mortar
Tilray would go down,
absolutely is ultimately,
predicted S&P would go up, and it did.
Where we absolutely want to put direct-to-consumer is something that, we would absolutely look at too.
Yeah, understood. Agree. Yeah. Look, so regarding the U.S., I'm not going to make you repeat what you already said.
There it goes.
You have this vision how medical cannabis could be federally legalized in the U.S. Of course, we'll see how that plays out. You recently appointed Stephen Cohen to your board. We look at some of your peers like Canopy Growth and SNDL building beachheads in the U.S. with more of a rec type of focus. I just want to understand, given your apparent evolving views in terms of how the U.S. may deregulate, especially with the new administration, how are you thinking about when and how to maybe, follow the model of some of your peers in terms of trying to build beachheads on the rec side? You tried to do that with MedMen, and I'm wondering how you're thinking about that right now. Thank you.
Listen, good question, and I think it's like buying somewhat like a lottery ticket, Pablo. But I think my strategy so far is we would be ready for it and could be ready for it in a very quick period of time. We have an infrastructure of a whole medical group in Canada. We have an infrastructure
predicted today that Tilray would go under $1.
Together, within 90 days, we could be in the medical cannabis.
I bought 5 more shares of the S&P.
What legalization is, and I've seen a lot of companies go out there and buy options,
Good luck all.
do things that never came to fruition, and spent a lot of money. We did buy the debt of MedMen. We still own the IP for the brand MedMen. So with that, we have a close eye on it. Right now, our focus is on Delta 9 drinks, which we think is a big opportunity. Like I said, we'd love to be able to sell, and let me tell you something. If we could sell our medical cannabis in Canada, $250 million business, that at a 2-3%, that would be very, additive to Tilray. But until legalization, until things change, and my thing is, the Trump organization will look at this here just because of the dollars it will contribute to, bringing in more tax dollars and also eliminating, from the illicit market and eliminating all the confusion, helping with safe bank. When do I think it will happen? As I said before, I think it will happen during this administration, but I did say it would happen during the Biden administration too. But I think, this administration is much more business opportunistic, and we'll look at it with right regulation, and I think that's what's important here. In the meantime, that's a good thing, and which I've said about Tilray. We have built a really strong business in the U.S. today with our beverage business, with our spirits business, and our wellness business. And I will mention, there is a big focus today on growing our wellness business. And, whether it's additional acquisitions, additional opportunities with hemp, which we think is, high protein, fiber products, and that's a big, opportunity for Tilray.
Got it. Thank you.
Thank you.
Thank you. Our next question comes from the line of Michael Lavery with Piper Sandler. Please proceed with your question.
Thank you. Good morning.
Morning.
I just wanted to follow up on a couple things. I guess first on the Delta 9 beverages, the traction, especially that you just called out, like a Louisiana or Minnesota, it's proven to be strongest where there isn't adult use opportunities at the state level. How much do you sort of account for that as a potential limitation, and how does that shape some of your thinking? And then just on the guidance, I know you went through some of that in an earlier question. Just want to follow up on how the SKU rationalization timing fits in. Was that in part of the guidance thinking all along, or has it changed? And if it's newer, is it the innovation that's new to offset it? Just help us think about some of the puts and takes there.
So, first of all, in regards to, where do I see the big states and the big opportunities? Texas, Florida, Georgia are some of the big, states, and which are big beer states and, big opportunistic states for us. I mean, if you come back and look at the size of those states and some of the biggest states out there, and they're some of the biggest markets where we sell beer today. So that is where I see our big opportunities from a standpoint there. In regards to our guidance and our SKU rationalization, so far we've taken, approximately $17-18 million of sales. It's probably about a $2 million EBITDA hit. Again, there's probably another, there's probably another about $10 million of SKU rationalization that will come out of our top line sales. Now, again, what you heard us say, what's happening now, those sales that come out, we're replacing them with new products and faster selling SKUs.
And I guess
it's a rotation of those products, and not everything hits on timing, but it's taking lower margin, a lot slower selling SKUs out and replacing them with new products, higher selling products and higher margin products to replace those.
And then we should understand that as your color on the spring shelf resets as having that in hand and the one-for-one swaps.
Wait, no, I didn't understand. You broke up on that question last piece.
Yeah, when you were saying how the innovation would offset the SKU rationalizations, you were talking about the better timing this go round for the shelf resets in the spring. Should we understand that you've got that in hand and already set to go?
Yes. I mean, there's a timing on that too. It's going to be approximately $20-25 million of sales that are coming out, but we would hope, with our new products and our faster selling SKUs with more space, we would make up those sales and then some. But there's a lag time on some of that too. It just doesn't all happen at once.
Okay. Thanks so much.
Thank you.
Thank you. Ladies and gentlemen, that concludes our question and answer session. I'll turn the floor back to Mr. Simon for any final comments.
So thank you, everybody, for jumping on our call today. And first and foremost, I want to put our thoughts with everybody in Los Angeles that's gone through that horrific fires out there that have lost their homes. And we're here thinking of you. And also in, what happened in New Orleans. We're living in an interesting world out there. From the standpoint of Tilray, as I sit here today and look at what we're doing and trying to understand, the growth of this company, you look at the cannabis industry and what we've done in cannabis over the last 5 years. As we sit and build out facilities today, we have 5 million square feet of grow in Canada today with over $1 billion+ that we've invested in building out those facilities. In regards to our breweries today, we have 10 breweries today that produce our product, 20 brew houses. We have a distillery in Breckenridge. We have manufacturing facilities in Winnipeg, Canada, that produce our hemp. And then we have 2 facilities in Europe that produce and grow cannabis, medical cannabis for us. So we have an incredible infrastructure out there to produce us with 90% of our products. We have today over 40 different brands, whether it's in beer, whether it's in spirits, whether it's in cannabis, whether it's in our wellness products. And we have an incredible team that I get to work with to help bring all this together from a manufacturing standpoint, from an operational standpoint, from a distribution standpoint, from a sales and marketing standpoint. Last but not least, we're building something different out there. There's no company out there today that's in the cannabis business, the wellness business, in the beverage business, and bringing it all together. We're, handcuffed by regulation. I wish tomorrow I could start selling cannabis in the U.S. and how big an opportunity is. Not a lot of companies just can't sell new products and go out there and do it. I wish I could sell cannabis-infused drinks in the U.S. I'm limited in Canada of how much I can do in Canada in my contribution, as I pay $1 per gram in excise tax. The richest cannabis company in Canada today is the Canadian government. We spend about $155 million in excise tax in Canada, higher than beer, higher than wine, higher than spirits. It's some of the highest excise tax of anything. And that's one of the biggest challenges. You think how much we sell in Canada today, and still from a profitability standpoint, because there just is a higher excise tax. The beer category is changing dramatically, and we will continue to change it. We will make beer fun again. We'll make it unique. We'll come out with new products. With RNDC and under, and now the beer group, Brian Nolt working with Ty, lots of opportunities that we see in spirits today with our bourbon, gin, and vodka. My past, I come from wellness foods. I think wellness is something that's going to be around forever, and hemp is going to be a big part as an ingredient, as a food, and we're, going to look at other opportunities within the wellness area. And last but not least, international, one of our, fastest growing business today, one of our most profitable business today. And if you look at it, 700 million people. So there's a lot of great DNA within Tilray today. There's a lot of great businesses within Tilray today. As we reach that $1 billion mark, and it's taken companies like Tesla, Amazon, Microsoft, long time, and we've been at it just 5 years. And we really got a great strategic plan, a great plan to bring it together. So stay tuned. I appreciate the support. Listen, I don't like how our stock performed, but I got to tell you, behind a stock got to be a great company, and that's ultimately what we're trying to build out there. I thank you for your support. Thank you very much for listening today. Just be safe out there. And again, my thoughts go out to people in LA. My thoughts go out to the people in New Orleans and the rest of the world. Thank you very much.
There we go. Congratulations, Sir Irwin Simon. Some good information out of that earnings today. However, as predicted, the stock price has gone down. Now, is it worth buying now? The overall market, we have to look at the overall market. We're going to discuss this further, but we have to now focus on the overall market because that's the bigger issue right now. The economy, rates being up for longer, companies like Tilray are going to struggle, and that's what we're seeing today. We've got a jobs report beat, however. I've just bought 5 more shares of the S&P, so I'm extremely happy to gain another 5 shares on this dip. Exactly where you see it now is the level I bought it, so I'm very happy with that. Let me show you today what people were saying. I was asking the question on the poll, would Tilray be green today? And remember, this Lucas Archie indicator is always accurate. It's so accurate, it's unbelievable. It's way better than a Fibonacci. It's always accurate because it's only voted upon by real investors. Bots, scammers, trolls, those that just make up stuff don't tend to vote on this. It's real investors. We said, would it be green today? And you said, no, it would not. 54% said no. So, and you're absolutely right. We predicted it would be a bad day for Tilray. It is a bad day for Tilray. And I think Irwin is got too much hope that Trump is going to help him out here. It's not going to happen. It's not a priority for him. It was a priority for the Biden administration, but not so much for the Trump administration, sadly. So it's not going to happen. This is going to keep trending down for a while. I think it can go below $1. Then, of course, everything then changes even worse. So I think the acquisition pushing is too much. The board aren't happy. I've got contacts at Tilray, and they don't like it. Irwin Simon might be out before you know it. He pays himself too much and constantly acquiring more breweries. You could just buy DraftKings. There are better businesses out there if you want a brewery. We didn't buy this to be a brewery business. We bought this to be in this sector. And I don't like using the words because it's not good for my channel. Anyway, there you go. Down again today. Are you going to buy this now? I don't know. I wouldn't. I think it's a very difficult thing to buy right now. I would rather buy it at $10 knowing it's going to $40. That's investing. If I know it's worth $40 and it's at $10, it's a good investment. But right now, I just cannot see a path to profitability at the moment. I would much rather wait and see what happens, and then I would buy it. I mean, of course, I won't buy it individually because that's not what I do for the show. I'm not here to pump and dump individual stocks. I only own the S&P, and you can see this morning, I do what I say, and I say what I do. If you look down here, I'll show you my VU position. I bought another 5 shares. If you scroll down here, I bought another 5 shares this morning at If you scroll down there, 5 shares at 537, which is exactly where it is right now. So you can see I'm accumulating more and more. It's not about where my portfolio is. It's about owning more and more stock, identifying macro conditions. Right, what we're going to do now is we have a few people to upgrade, a few members that have just joined the show. Thank you so much indeed. So what we're going to do is end this show, take you right over to Crash to Boom. Crash to Boom. That's exactly what happened. It's exactly what's going to happen. So we're going to go there right now. This live stream will be out available as its own video in the next few minutes. It won't take me very long. Since I got my upgrades of 1 gig up, I can upload the whole video in a few seconds. So just bear with me. What we're going to do now is go over to Crash to Boom. This is the next event. We're going to cover all the markets in a few moments. We're going to come back to you, upgrade all the members, go for all the stocks, look at the bigger picture. And today is a great day. It enabled me to buy another dip, a macro condition, overselling of the jobs report. It was a beat on jobs, and it enabled me to buy more. So let me give you the next show. Here is the next show. So next event live. Let's do that. Live, and if you want, of course it's the Friday phone in a few minutes as well. The Friday phone in, if you want to call in. There is the next event live. Let me pin it to the top. Let me now send everybody to the live event. Automatically, you can either click on the link or you can wait where you are and it'll do it automatically. We are going to go early. It's scheduled for 9:30. I will be ahead of time. I like to always put a bit extra time just in case the earnings overrun. So I want to thank everyone for tapping the like. We did get over 100 likes today, 118, which is absolutely fantastic. Thank you so much indeed. And we had 1,065 people join us. Congratulations to Powell Group, who had slightly higher than me as it peaked through there. He had 20 more viewers than me. So congratulations to him. We like a little bit of healthy competition on the show. It's always exciting to drive you forward. And the more people talking about the stocks that we're talking about, the better for everyone. Absolutely essential, that is. All right, good. So let's go over now to the next show. So stand by. It says 9:30, which is in 40 minutes from now, but it will go a lot earlier than that. Just allow me to end the stream, send you over there, be in the chat with me, and I'll upload the Tilray video, and then I'll be right back with you. So don't go anywhere. Keep it tuned here. I'll be back in just a few minutes' time. All right. It's now time to go to Crash to Boom. That was a lot of fun. I enjoyed that. And now we're going to digest more information on the global, on the whole market itself. See you back in a few minutes. Join me on the extra. Links up the top. You can go there or simply wait for it and it'll happen all by itself. See you back in a few minutes. Take care of yourselves and each other.